Good morning, viewers, and welcome to the Tuesday, August 18, 2020 edition of the Economy and Politics Show, where we continue our conversation on political economic activities across the nation as it affects Nigeria's economy. Here's the lineup for today as we look at economic developments and the oil and gas sector. First, we'll take a summary of the July 2020 inflation rate for Nigeria, and then go down to Seplat Development Petroleum Company and its community development efforts. We'll take a look at the developments in the Agbami Oil Field, OPEC production review, and also assessment of activities in the global oil markets. And let's first begin with the Nigerian inflation rates for July 2020 that came out yesterday. That was the biggest economic news story that came out yesterday. Nigeria's inflation increased by 12.82% year-on-year in July 2020. Also, urban inflation increased by 13.4% year-on-year. Rural inflation increased by 11.49%, while the composite food index rose by 15.48% year-on-year. The rise in the food index was caused by increases in the prices of bread and cereals, potatoes, yam, and other tubers, meat, fruits, oils, and fats, and fish. Core inflation, which excludes the price of volatile agricultural produce, stood at 10.10%, down by 0.03%. The highest increases in the core inflation were recorded in prices of medical services, passenger transport by air, pharmaceutical products, hospital services, passenger transport by road, maintenance and repair of personal transport equipment, paramedical services, and vehicle spare parts. Nigeria's inflation rate went up as data released by the Nigerian Bureau of Statistics showed that the domestic inflation rate rose to 12.82% in July 2020 from 12.56% in June 2020, the highest rate recorded in the year. The global spread of the coronavirus harmed indeed the domestic economy, and that analysis comes from the stable of the Proshare research team. Inflation is still on the steady rise and shows again why Nigeria is, according to analysts, on the pathway of a stagflation. Because when you have high unemployment, high inflation, it definitely takes the economy to that path. A lot of work to be done by the fiscal and monetary policy authorities and also state governments, private sector, and all stakeholders, because this indeed are dire times for Nigeria's economy. Let's get on to the petroleum, oil, and gas sector. Foremost indigenous energy company Seplat Petroleum Development Company PLC has reaffirmed its resolve to develop communities in areas it has its operations, and one of them is Imo State. Ensuring that more lives are positively impacted in line with the United Nations Sustainable Development Goals, the chairman of Seplat Petroleum Development Company, Dr. Ottoabasi Abasiekong, said this over the weekend when he led the management team of the company in a courtesy call to the Imo State Governor, His Excellency Senator Hope Uzodinma, and leaders of host communities in Ohaji and others at the Government House, Owerri. The call, which was aimed at fostering better relationship among stakeholders to drive sustainable development in the state, had Governor Uzodinma laud Seplat's success story so far in the country and internationally. The governor charged Seplat chairman and his team to take advantage of the current shared prosperity model of 3R, which is the superstructure of rehabilitation, reconstruction, and recovery of key economic and political institutions in the state and host communities in particular. According to him, there is a new order. We may not be able to do business as usual in Ohaji, where the traditional ruler would not be recognized in decision-making and taking of the companies doing business in his community, he stated. The governor urged Seplat to continue to engage the Imo people in the running of the company. Speaking further, he said, if the community is good to host your business, the people from the community should also be good to be part of the management. If you think they do not have the requisite qualifications, train them to your standard and use them. In line with the development of key infrastructure in Imo State, the governor further urged Seplat to take advantage of the federal government tax relief and embark on reconstruction of 1 or 2 federal roads in Imo State. The governor also encouraged Seplat to do more town hall meetings with its host communities where the needs of the people will be collectively assessed based on global standards regardless of the existing corporate social responsibility programs. He also urged Seplat to gain more in terms of engaging the traditional rulers and spread its town hall meetings across the various communities it's operating in. he stressed that his administration is interested in establishing a petrochemical industry and gas fabrication plant that can power a planned industrial layout in Owerri, Imo State's capital. On the operations of Seplat, he called on Seplat to ensure that the annual gas project at Asa becomes a success story. That's one of the huge investments of Seplat in Imo State. Speaking on behalf of Seplat, the chairman, Dr. Abisi Ojiako, agreed with the governor on the development plans and explained that Seplat was interested in developing the areas, particularly where it operates. He said they were looking at improving the premium of quality of life of the people, and also over the years, looking at investment in the human capital development and critical structures and projects that can transform their communities where they operate. He also lauded the government for taking steps to also improve development and sustainable progress in the state. He commended the governor for also taking those initiatives and engaging Seplat, and also assured that Seplat will continue to interact with the host communities and hear from them areas they can work together to achieve great strides. The traditional ruler of Asa, where the Seplat project is being situated, Eze Emmanuel Aso commended Governor Uzodinma for giving them the opportunity to interface with Seplat. Eze Aso further assured the governor and the Seplat Petroleum Development team that the community will continue to cooperate and support the activities. He committed to the common resolve that value creation for the community will be at the hallmark, while security of the investments of Seplat will be guaranteed. The meeting had also in attendance the Deputy Governor of the state, Professor Placid Njoku, the Chief of Staff, Barrister Nnamdi Anyehe, and other commissioners that were relevant and in attendance. That once again brings to the fore the importance of petroleum development companies and their interaction with host communities. Over the years, this has been a major challenge in Nigeria. Take cognizance of what led to the movement of survival of Ogoni people. Ogoni is a community that is one of the biggest oil and gas production base where Shell operates, and there were issues that led to the formation of MOSOP. And those of you that remember, in 1995, the leader of that group, Mr. Ken Sariwa, was killed alongside other activists. And so it's important that petroleum development companies in Nigeria continue to engage their communities, and on the community's part, they also engage with transparency and accountability, because Niger Delta regions particularly need to have something to show for years and years of oil and gas investment. And definitely we hope that Seplat's interaction with the community in Asa will be a template that others can use to drive effective community relations between oil and gas companies and host communities. And this reinforces the need for the Petroleum Industry Bill to be signed, which also caters for that. Let's look at one very major oil field that's of huge interest to Nigeria and huge interest to various operators. This is the Agbami Oil Field. And let's give some highlights on what's coming up so far from that oil field. First, we look at the labeling of this as a crude or condensate, which is dividing the oil market. It's a crude and condensate, huge oil field market that creates enormous opportunities for investments. Nigeria, on its part, is asking international oil companies to reclassify Agbami as a condensate, because there has been much debate about an oil reserve or a condensate. Agbami is marketed as light sweet crude to refiners, and that's why it's a very huge gold mine in terms of the oil and gas operations. Nigeria's compliance to OPEC Plus quota hinges on the Agbami exemption in terms of the full compliance to OPEC Plus deal and oil grade being treated at the moment. It has to now be looked as a condensate. That is what Nigeria demands in terms of classification of Agbami. Since OPEC Plus allowed ultralight oil to be exempt from its production cut deal, the West African nation's Agbami has been a bone of contention. The challenge is that nobody from international oil companies to those that monitor OPEC, that's the oil producing exporting countries' output, can agree on whether it should be classed as a crude or not. Nigeria's Petroleum Ministry officials are asking international oil companies like Chevron and Equinor to reclassify Agbami as a condensate rather than a crude, sources have disclosed over the week. A representative of Nigeria's oil ministry confirmed that Agbami is a condensate, saying the pressure, volume, temperature analysis characterization of Agbami's reservoir fluids prove it is not a crude. But the field's partners are not on the same page. Chevron, which operates the Agbami field and operations, have always listed the grade as a crude on their website and markets it as light sweet crude oil to its customers. Similarly, equity partner Equinor also classifies the grade as a light sweet crude according to its website. So trading sources have told S&P Global Platts that the grade is marketed as a light sweet crude as it is not derived from a gas condensate field. Lagos-based Fanfa Oil, which also holds a stake in the oil field, has also termed it as a crude oil on its website. So you can see the operators having one perspective and the government another perspective. A spokesman at Equinor who declined comments when asked about the ministry and the operations conducted on the calculation of Agbami Oil Field said he would not further disclose issues around it, while representatives at Chevron and Fanfa were unavailable for further clarifications. Agbami has an API of over 47.9 degrees and a sulfur content of 0.04%, with production ranging between 160,000 barrels per day and 250,000 barrels per day in the past 12 months. Now, according to Global Platts, S&P Global Platts estimates, Agbami is a popular grade among global refiners and is regularly exported to a wide array of countries like India, Australia, Spain, the Netherlands, China, and Brazil. And so that's why now you will agree with me that Agbami is now a huge contention in terms of classification. For the oil operators, it is classified as a light sweet crude, while for the government, they see it as a condensate. Definitely, there should be more discussions to agree on its classification to ensure that value is derived from that oil field and it continues to create jobs and bring more revenue to the government. Now let's look at oil-producing, exporting countries' activities so far. Nigeria is a member of OPEC, and this should be of interest to investors, analysts, and stakeholders in the industry. Now, compared to the planned phase one of OPEC plus cuts of 9.7 million barrels per day, remember that was the agreed cut, the group has achieved 9.23 million barrels per day between May and July, with an average compliance of 94%, not so bad in terms of compliance level. The global oil consumption improved by 3.03 million barrels per day in July to 93.4 million barrels per day, reflecting reopening of industrial activities and some form of mobility post-COVID pandemic. You know that from March ending to June, globally, there were huge decline in activities because of the lockdown. Oil market recorded a net deficit of 4.7 million barrels per day in July, with Brent crude spot prices averaging $43.3 per barrel, up $2.5 per barrel from the average in June. This is also showing unprecedented supply cuts as some countries are still faltering in their activities. OPEC compliance faltered in July, which was the last month of the first phase of the OPEC Plus output cut deal. The production by 10 OPEC members in their accord increased by 0.979 million barrels per day in July to 20.8 million barrels per day, compared to 19.8 million barrels per day in June. As a result, compared to the resounding compliance rate of the cartel in June of 112%, compliance in July loosened to 96% as output fell short of the agreed cap of 20.55 million barrels per day due to compliance breaches by some members and end of some voluntary cuts by Saudi Arabia, United Arab Emirates, and Kuwait, those Gulf kingdoms, giving some challenges there. During the first phase of the deal, which was situated or designed for May to July, the cartel achieved average compliance rate of 97%, which is 91% excluding excess cuts, helped largely by voluntary cuts by Saudi Arabia, UAE, and still Kuwait. Iraq and Nigeria continue to fall short of the agreed cuts, with compliance shortfalls of 16% and 19% respectively. So Nigeria's compliance fell short by 19% in terms of the analysis. Excluding the OPEC 10 production in Venezuela, one of the big oil producers, and Iran remain constrained by the U.S. sanctions. These two are major oil producers but are under the radar of U.S. sanctions, while the blockade of export terminals in Libya has kept output below 100,000 barrels per day. So for the OPEC Plus allies, Russia, which is a key partner, achieved average compliance rates of 93% over the phase one deal, with production averaging 8.65 million barrels per day. That's 8.65 million barrels per day, compared to its planned production cap of 8.47 million barrels per day. Mexico, Oman, and Bahrain exceeded their agreed cuts, achieving compliance rates of 115%, 103%, and 122% respectively, while Kazakhstan, Azerbaijan, Malaysia, and other smaller oil producers fell short of the compliance rate. In all, compared to the planned Phase 1 OPEC Plus production cut of 9.7 million barrels per day, the group only achieved that 9.23 million barrels per day between May and July, as we said earlier, averaging the compliance of 94%. So indeed, compliance has not been really easy. It's been a challenge for oil-producing members, and there's a lot we would continue to monitor in terms of the oil production and as it affects revenue for countries like Nigeria. Let's take a look also at current updates on global crude oil activities. Data from the OPEC monthly oil market report for the month of July showed that Brent was up 6% month-on-month to average US $43.22 per barrel, compared with US $40.77 per barrel in June. According to analysis, it is noted that it is the third consecutive monthly increase in oil prices, following the significant dip in April when the Brent fell to an 18-year low of $19.33 per barrel as at 21st of April. However, year-to-date, Brent remains substantially lower at an average price of $42.27 per barrel, which was down 35.8% as at the end of July when compared with the average of US $65.86 per barrel in the same period in 2019. Notably, the report revealed that daily crude oil production in Nigeria, based on direct communication, declined by 2.7% month-on-month to 1.37 million barrels in July. That's the production in Nigeria, as the country continues to work and needs additional oil output cuts from July to September to compensate for initially exceeding its quota in May and June. For those of you that remember, Nigeria exceeded its quota and has to now balance it between the period of July to September. The report analysis believes that the sustained uptick in Brent prices in the month of July is reflective of the continued recovery in global demand for crude compared to initially March to June period, where it was so low that it affected oil producers. And it's supported again by the relaxation of the COVID-19 lockdown measures, as well as the OPEC Plus production cuts, which contributed to a gradual rebalancing of the global oil markets. Now, OPEC has noted that oil prices were also buoyed by marginal improvements in refining activities in China, India, and US, reduction in crude overhang alongside a weakening of the US dollar against a basket of currencies, which provided support for increased demand for commodities traded in the US dollar. So some respite, some insights of good recovery to come from the oil and gas sector. Don't note that it has been a very difficult period for global production and even from global oil majors. Now, let's take an insight into the review of last week's activities in the crude oil, global oil market and how did it fare. It was another week, that's last week, of snoozer for oil prices. The West Texas Intermediate and Brent remained in a narrow range, although their foothold in the $40 region feels more solid than it had in the past. Data this last week showed another decent stock decline, along with an uptick in gasoline demand. According to the International Energy Agency, IEA, oil demand was taking a hit. It says that crude oil demand this year, 2020, will be 8.1 million barrels per day lower than it was in 2019. That is something that all oil stakeholders, oil and gas stakeholders, should take note of. A downward demand forecast revision of 140,000 barrels per day. The IEA said in its latest oil market report, the agency cited that the very weak aviation industry is one reason why demand could remain depressed. So the aviation industry, which is hardly hit, is also having its effect on the global oil and gas market. Also over the week, the US seized Iranian fuel ships. That was a major story in the oil and gas market globally. US filed a lawsuit in July against 4 ships carrying gasoline from Iran to Venezuela. The US officials said the 4 ships were en route to Houston, Texas, and the seizures should deter ship owners from taking business in violation of the US sanctions. Don't forget, US has sanctions on those countries. China's refinery runs hits a huge record. Now, we told you earlier that activities are now picking up in China's crude oil refinery, and that is why there's the hope of more demand for global oil. China's refinery processing surged by 12% in July month-on-month, but that coincided with a build-up in refined products inventories. Refineries have likely cut processing for the month, and so we're going to see a lot of activities, hopefully, from China in terms of crude oil demand and production. The administration of President Trump rolled back methane regulations. That was a key decision taken last week. The Environmental Protection Agency in the U.S. announced a rollback of the methane regulations on oil and gas activities. Smaller drillers favored the removal of the regulation, but the oil majors opposed the move. The majors have betted big on natural gas as a source of growth in a low-carbon world, and the fear of the reputational stain on gas from increased methane emissions was a concern to them, but now President Trump has taken a step there. France, in terms of security, has sent its naval forces to Eastern Mediterranean region. That was happening last week in terms of providing military assistance to Greece and to deter Turkey from oil and gas exploration in contested areas. Now, there are some contested areas globally in terms of crude oil and gas activities. And so this is why France sent its naval forces to once again guarantee security of its installations and activities in that area. The situation in the Eastern Mediterranean axis is alarming, but Turkey's unilateral decisions in matter of oil has sparked up provocations, and President Emmanuel Macron of France had to step up and agree that he will send his naval forces to protect those platforms and activities. Now, the Mountain Valley Pipeline in North Carolina permit was rejected last week. Regulators denied a key water permit for the Mountain Valley Pipeline, one of the few remaining high-profile long-distance natural gas pipeline under construction. The pipeline will carry Morelos shale gas to the southeast. Now, this is a joint venture project with developers, EQM Midstream, and the subsidiaries of several utilities, including NextEra. And that, again, is a huge challenge when you look at the role of regulation in impeding oil and gas operations, particularly in the U.S. Shale production has been described as one area that the global oil and gas market will be watching, and regulations, again, will be key into how it's unlocked. Now, British Petroleum, one of the biggest oil and gas majors in the world, is considering a radical reconfiguring of its offices. Yes, you've heard offices like Facebook planning, so BP is also joining in terms of letting leases expire on its office space and shifting nearly 50,000 employees to remote working experience. So that is what BP is considering. They're mulling the option of moving 50,000 of its workers to the remote working experience and then closing up on their leases. Well, what they call the new normal from COVID-19. And then last week we saw that there was a decline in the U.S. flaring. Global glass flaring hit its highest level in a decade, and this is really interesting, with much of the increase coming from the U.S. shale. However, in the past 12 months, gas flaring in the U.S. had declined by 70%, according to the Earth Observation Group at the Payne Institute for Public Policy. The decline was largely driven by a slowdown in drilling. Capital discipline presents even a hopeful scenario in which a consolidated industry can get a handle on the flaring crisis. And that's another big one for environmentalists, because gas flaring has been described as one of those huge concerns for a global safe environment. And then Shell, big players in the global oil market, is looking at a stake in a $9 billion Indian petrochemical project. Very huge investment. Amidst the COVID-19, we're seeing big oil majors taking on some projects. They're eyeing a 50% stake in that $9 billion petrochemical project in India, and definitely, if it sells through, it will be one huge investment that the Indian oil and gas industry will be receiving. But one major oil producer in the world, Venezuela, has been in crisis. The Latin American country, oil exports are suffering another blow, and that was the situation for them last week. The quality of the crude loaded on tankers, according to experts, are so poor that loadings are being delayed at the moment. IHS Markit said that Venezuela could soon be producing close to 0 barrels of oil. Currently, their production has fallen to about 100,000 to 200,000 barrels per day, down from 650,000 barrels per day, which was a year ago. So for those of you that have been watching Venezuela, definitely there are fears of a socio-political crisis imploding in that country, which is led by President Nicolas Maduro, because if this continues, they're going to have low revenue, low external reserve, and definitely this is going to lead to a huge crisis. The country is in dire situation, and well, their allies are only the ones that can help them now in this period. Let's look at the U.S. offshore activities. Last week, they're looking at the offshore wind to see an explosive growth. We're hearing that the U.S. could have as much as 25 gigawatts of offshore wind built by 2030. If that happens, that's going to be a massive energy source for U.S. And I think Nigeria will now be challenged to step up too in terms of its renewable energy prospects. Major global oil and gas company Exxon is looking at its Payara project in Guyana and is putting it on hold for now. As you all know, that major oil and gas projects are being reviewed considering the challenges of the COVID-19 pandemic. So the Payara-Pakora Joint Development Project in offshore Guyana has been placed on hold until the new administration of the President, Mohamed Ilfan Ali, conducts a thorough review of the project. So definitely that project will be reviewed by the governments. Again, issues of regulation and engagement with the major players. Hope that they get it right so they can attract more investments in Guyana. Now, Saudi Aramco, which we all know is one of the biggest valued companies in the world, apart from being a state oil company of Saudi Arabia, is also on the news. Last week, it said it would cut spending, lowering its planned capital expenditure to $20 from $25, $20 to $25 billion, I meant to say, in this year. And that was from the previous guidance of $25 to $30 billion. So if that happens, it will definitely affect some level of its value chain, dropping its investments and activities. That, again, is what you get when you have this very unprecedented pandemic that's impacted the global oil and gas markets. And High Crush gave millions to executives right before bankruptcy. Well, you've heard about the High Crush company, servicing company, and its challenge with bankruptcy. But the report in the U.S. For last week said that it handed out $3 million in executive compensation to 4 executives 5 days before declaring bankruptcy. Wow. What an interesting experience. Definitely, there will be much more auditing of that activity. And this one is really, really interesting. The 5 largest oil majors wrote down a combined $50 billion in assets. $50 billion in assets, and slashed production by 1 million barrels per day. That was a major story that we had last week. The only company in that class that did not write down any assets is ExxonMobil. And although the company said in a filing that it may revise down its reserves at the end of the year. So imagine $50 billion worth of assets being written down by global oil majors. Just imagine that and how it will impact the global oil and gas market. This is why we're saying that in this period of uncertainty, there's a lot that we will bring to you in terms of how the oil and gas market is repositioning itself, how companies are strategizing, and how they intend to navigate. For countries like Nigeria, we have to rethink, we have to explore new ways, because for this year, we may not see huge investment as before, but definitely there must be a way to ensure that transparency and accountability is entrenched in the oil and gas industry. Necessary legislations like the Petroleum Industry Bill should be signed into law. And also, we need to also drive state oil companies. Look at how Saudi Aramco has transformed the entire market. Today, the Saudi Stock Exchange, the Tadawul, is now the top 10 most valued stock exchange in the world. And part of that reason is because Saudi Aramco listed in the exchange. So imagine us having the Nigerian National Petroleum Corporation leveraging the Nigerian capital market, listed in terms of its huge ecosystem and value chain. That will further deepen the capitalization of the Nigerian Stock Exchange. I remember the dream, there was this bold dream of a $1 trillion capitalization. Saudi Arabia's exchange is $2.1 trillion capitalization, and that is because of what Saudi Aramco did in that space. So there is a lot of opportunity, but we must be innovative, be intentional in driving a robust oil and gas industry that benefits everybody, including the host communities and the entire nation. Well, So much to learn from the oil and gas industry. I will make this happen again next week, Tuesday. We'll give you some more deeper insights. And that'll be a wrap for the Economy and Politics show for today. Please send your comments and views to news@ProshareNG.com, and also join our website, www.ProshareNG.com, to watch our videos, read our news reports and analysis. To come your way again, watch out 10 a.m. today as we have an interesting conversation on impact investing. You must have heard about it, but you need to learn to understand what it's all about. We'll be featuring Mr. Andrew Carey. He is the co-head of Impact Financing and Investing at Hovey Levels. It will be very important for you to learn what we're discussing around impact investing and how it can transform the market. That's why you watch out for this by 10 a.m. when we look at the financial and capital market as it affects the economy. Don't miss out on this interesting conversation. Thank you very much for being with us today. And please, in every conversation you have around politics and economy, make it constructive and productive. Let's not abuse ourselves. We remain one Nigeria. Thank you for watching. Have a nice time and stay safe.